Let me run you through a situation that catches out a lot of landlords. You might think, I don't really need landlord insurance. It feels optional. My home insurance and building insurance should be enough. On average, landlord insurance in Australia might cost you around $400 a year, and it's generally tax deductible as an investment expense. But then, imagine this: a tenant stops paying rent, 1 month passes, then another, and then a third. You are still covering your loan repayments. Council rates still arrive. Insurance premiums, strata levies, maintenance costs, they do not pause just because the rent has. You start dipping into savings to keep everything afloat. The stress builds as the arrears grow. By the time the tribunal process runs its course and that tenant finally leaves, you are already thousands of dollars behind. Then you walk back into the property. Damage, rubbish left behind, no end of lease clean. The bond barely scratches the surface, and you are left carrying the unpaid rent, the repair bills, and then the pressure of ongoing repayments with no income coming in. That's when many property owners realize that home insurance, building insurance, and landlord insurance are designed for very different situations. Hi, it's Lawrence from Duo Insurance, here to help Australian property investors protect their rental properties. If you own an investment property in Australia, this is especially relevant to you. A lot of landlords don't mean to underinsure. It usually happens when someone rents out a former home, becomes an accidental landlord, or assumes that having home insurance and building insurance is already in place means they're covered. The issue is that insurance isn't based on who owns the property. It's based on how the property is used. The moment a tenant starts paying rent, the risk profile changes. And if their insurance doesn't match the change, gaps in the cover can appear very quickly. Let's start with home insurance, because this is where most confusion begins. Home insurance is designed for owner-occupied properties. In other words, it assumes you live in the home. In Australia, home insurance usually includes building insurance, contents insurance, or a combination of both. Building insurance covers the structure of the property, things like the walls, roof, and fitting fixtures. Contents insurance covers personal belongings owned by the person living there. Most home insurance policies also include public liability cover, which protects you if someone is injured while visiting your property. The problem is that home insurance isn't built to deal with tenants, rental income, or the legal obligation that comes with leasing a property. Landlord insurance is designed specifically for properties that are rented out. It recognizes that once a tenant moves in, the risks change. You're no longer just protecting a building, you're protecting rental income, fixtures provided to the tenants, and yourself against tenant-related legal risks. Landlord insurance usually includes building cover and landlord contents cover. Landlord contents are items you provide as part of a rental, things like carpet, blinds, light fittings, and fitted appliances. A key feature that sets landlord insurance apart is loss of rent income cover. If a tenant stops paying rent, or if property becomes uninhabitable due to an insured event like fire or storm, landlord insurance can help protect your cash flow. Many policies also cover malicious or accidental damage caused by the tenant, along with legal liability if a tenant or a visitor is injured at the property. While both policies may cover damage to the building, they respond very differently once rent is involved. Home insurance generally does not cover tenant damage, unpaid rent, or disputes that arise from tenancy agreements. That's why relying on home insurance or building insurance alone for rental property can leave some of the biggest risks completely uninsured. Home insurance generally does not cover loss of rental income. So if tenants stop paying rent or the property can't be lived in, there's usually no financial support for loss of income. Damage caused by tenants is another major gap. Whether the damage is accidental or deliberate, many home insurance policies exclude tenant-related damage altogether. Legal liability linked to tenancy agreements can also fall outside standard home insurance cover, especially if the insurers weren't told the property was being rented. In some cases, they can result in claims being denied entirely. Landlord insurance, on the other hand, is designed to fill those gaps. It's designed to protect rental income, cover tenant-related damage, and provide legal protection connected to leasing a property. Loss of rent and an add-on rental default covers are two of the most important features. Many landlord insurance policies also cover malicious and accidental damage caused by the tenant, along with damage to landlord-owned fixtures and fittings. Legal liability cover is another key benefit. If a tenant or visitor is injured at the property and you're held responsible, landlord insurance can help cover legal costs and compensation. So which insurance do you actually need? If you live in the property as the main residence, home insurance and building insurance are usually appropriate. But if the property is rented out, even if it used to be your home, or you plan to move back in one day, landlord insurance can provide an added layer of protection that standard building cover may not offer. If you're unsure whether your current policy is best suited for your situation, it's worth consulting your insurance provider. At Dual Insurance, we can help property owners understand their risks and choose landlord insurance that fits their property and financial situation. If you found this useful, give us a like and hit that subscribe button for more clear, practical guidance for property investors.